Hey guys, I'm Alex Shelton. Thanks for tuning in to another video. And please hit that subscribe button for consistent updates on mortgage tips and what's happening with the market. And if you find something useful in this video, please click that like button because it's free to you and would mean the world to me. Also, stay tuned to the end of the video because I'm going to give you an awesome tip on how to spot teaser online rates that may make a difference in how you move forward with your purchase. So without further ado, let's get to it. This video, I'm going to talk to you about what goes into an interest rate. And there are a ton of factors that can affect your rate. Most people think that it's just your credit score that's going to play the difference. And although that is a factor, it's not the only factor. So yes, your credit score does make a difference. We like to see credit scores over 800 to give you access to the better rates. Any score below that, you're going to see incremental declines, which means your rate will be higher depending on where your credit score falls in. So there's different thresholds we look at to determine your rate. Additionally, down payment plays a factor as well. So whether you're putting 5% down, 3% down, 20% down, will play a factor in your interest rate. The more money you put down, the better rate that you're going to find. Also, the type of property. So if you're looking at a condo, that's typically going to have a higher interest rate versus a single family home or a planned unit development or PUD. And that's because the banks look at condos as the biggest risk because there's an HOA involved. And not only do you have to get approved, but so does the HOA. So be on the lookout for higher interest rates on condos. Additionally, the type of product that you're getting, whether it's a conventional loan, those typically have the lowest rates. Jumbo loans can have lower rates. I know they do right now. If you're looking at an FHA loan or a VA loan, those different products are going to give you different interest rates. Additionally, if you're picking a different type of length of term, so if you're looking at a 30-year fixed versus a 15-year fixed, the lower you have the amortization period, the lower the interest rate. Also, if you are looking at an ARM product, so like a 7/1 ARM, meaning that it's fixed for 7 years, that's typically going to have a lower interest rate than like a 30-year fixed loan. But then you do have that inherent risk after the 7 years, that rate can float. Now, the other piece I want to talk to you about is what's happening with the market. So on any given day, the rate can be different depending on what's happening with the bond market. So right now, rates are super low. So if you haven't talked to somebody about purchasing or refinancing, please give me a call. I'd be happy to review all the different factors that go into your rate, see if we can drop your payments, or if you want to pull cash out, and see also if we can get you qualified for a purchase. So just depending on what's happening with the market that day, it's sort of like trying to figure out where the price of a stock's going to be tomorrow. All the experts can weigh in on where they think it's going to go, but we really don't know until the time is here. So any given day that the rate could be different, and it could change by the hour as well. So another piece I want to talk to you about is the length of term your rate is locked. So when you go into escrow on a property, if you have a 30-day escrow, you would lock your interest rate for 30 days. Now, if you're buying new construction, you may need to lock in your interest rate longer because it could take, let's say, 6 months to build the new property for you. Well, a longer rate lock is going to inherently have a longer rate, a higher rate. And that's because the bank's sort of gambling with that money over a longer period of time. So they charge you to do that. So either 30 days, 45 days, 60 days, depending on how long your escrow period, could also affect your interest rate. And then lastly, I promised I'd talk to you about points and teaser rates. When you're exploring rates online, or you hear something on the radio, those are always called teaser rates. And that's because they're going to give you the best rate that's available on the best terms. So it could be a large down payment, possibly paying a point, and perfect credit score on a single family home, on a primary residence. I mean, these are all factors that go into what your rate could be. And depending on what your actual case is, you may not have access to that rate. So it's important you speak with somebody like myself that can tailor your rate to you so that you get an accurate quote that's specific to your purchase. So if you're buying a primary residence or a second home or an investment property, all these could be net you different interest rates, all other things being equal. So if you have any questions, don't hesitate to reach out. Again, please hit the subscribe button for consistent videos from myself, and hit that like button if you found something useful. We'll see you on the next video. Thanks, guys.